Hey everybody, Boris. Welcome to the Commodity Dollars update for May 1 to May 5 of 2017 for Aussie dollar, dollar CAD, and Kiwi dollar. And the story with the COM dollar complex is, of course, the slow but very, very clear drift downward across the whole complex. Aussie, Kiwi, CAD, all of them lower this week as commodity prices keep shifting lower. And also, first of all, the majors have rallied tremendously, but even the dollar has rallied against those on yield differential basis. Next week could be a very interesting week because if the dollar yields compress, if U.S. yields start to compress, maybe there's a chance here for a small rebound on the COM dollar complex. But generally, overall, it still remains both technically and fundamentally pretty much underwater. We do have a lot more data coming up next week. Let's take a look at the calendar here, just 1 second, and we'll see how the calendar shapes up for next week. So obviously, we have the RBA cash rate, we have the Kiwi milk dairy auction, then New Zealand employment, then Australian trade balance, then Canadian trade balance, monetary policy statement, which is probably going to be very, very similar to the, to the RBA statement, and lastly, the employment change out of Canada. Canada also, and this is the other thing that sort of happened last week that had a big pressure point on all the commodity complex. Canada came under the gun of the Trump administration with the potential threat of a renegotiation of NAFTA and all sorts of threats of protectionist measures. And although, and this is kind of interesting, although Australia and New Zealand are nowhere near Canada, they kind of gotten destroyed in sympathy, in a sense that the fear here is if the Trump administration is going to slap all sorts of agricultural protectionist tariffs on Canada, it's going to affect everybody else that has any kind of agricultural business with the U.S. So it's interesting because the weakness in the commodity dollar complex is less about the internal weakness of those economies and much more in some ways about the very, very cold grip of protectionist fever that's starting to sweep the U.S. And one of the interesting things that happens, I think, is that if Trump administration changes its mind, which it's known to do, of course, every 24 hours, and doesn't become nearly as aggressive in its tariff policy, you may have a little bit of a relief rally across the whole commodity complex. In other words, a lot of the movement here is really not economically driven. But on the economic front here, nothing much new, of course, I think, out of the RBA. The inflation data last week, and you can take a look at the inflation data last week out of Australia. It was mixed. We really didn't have any powerful inflation impetus here. It means that essentially very little coming out of Australia that's going to push the RBA to want a tighten policy anytime soon. On the New Zealand side, it'll be interesting to see how the employment data comes in, whether the economy continues to run hot or whether it starts to cool off, because certainly the RBNZ has been very dovish in its policy because they wanted to guide the Kiwi lower. But now with Kiwi near the 68-cent level, the need for further dovishness on the monetary policy, especially if employment numbers continue to improve, is going to diminish considerably. So there's a potential here, I think, if there's an upside surprise for Kiwi to rally, at least on a relative basis, and perhaps even on an absolute basis as well. And then, of course, CAD is going to really be driven very much on employment data and whatever skirmishes we have on the political side next week vis-a-vis the protectionist rhetoric out of Washington. So a lot of very interesting cross currents going on. But on a technical side, when we take a look at the charts here, the picture doesn't look very pretty. You really see, and actually before we look at the charts, let's just take a look at the support resistance levels. So all the support resistance levels have really pushed down, or in case of dollar CAD, pushed up, at least by a penny. So Aussie now it's 76 resistance, 74 support. Kiwi is now 68 support, 70 resistance, and CAD really at the upper end of its range, and it's kind of the most interesting because it's really breaking out into the top of its range, and it may very well be one of those kind of things that if it breaks out strongly, you potentially have a move here towards the 140. Let's take a look at the charts here, and I'll show you what I mean. So Aussie definitely went from essentially, a relatively neutral chart that was consolidating between the 75 to 77 level to now really starting to look like a breakdown chart with a series of failed highs. A failed high here, failed high here. By failed, I mean it's lower than the prior high, lower than the prior high. That's a very negative construct technically. Doesn't bode well. And here, the break of the 74.50, 74.30 level really creates a much more negative technical picture. First of all, it opens up the run towards the 74 very quickly, but ultimately, it really opens up the full unwind back down to the 72s to the lows of the year. So from a technical point of view here, Aussie looks quite weak and could unwind further, especially if RBA comes in relatively dovish and doesn't look at all supportive. They may even hint at further QE expansion, which further interest rate cuts, which I doubt, but it's a possibility. In any ways, the market certainly is not loving Aussie at this point. And if you look at the technical numbers, I think, oops, sorry, my chart just went off. If you look at the technical structure and take it from there, it really looks very much like a sell, and certainly sell of the lows here at this point. Let's take a look at the Kiwi first, and then we'll leave the Caddy for last. So Kiwi, very similar picture, and Kiwi really looks ugly because we broke the support here. I thought 69 would really hold, and it really hasn't. And now the final kind of level of support is the 68.50. Once we break that, we'll have to go to the weekly chart. Let me just go to the weekly chart. Oops, sorry, just bear with me. And start looking potentially now at the 67, the 66 area as the next big level of support. On the weekly chart, this is a very, very ugly candle. This is a candle that suggests much further downside action. And I think if you look at the weekly candle here, you've got to, because what I mean by an ugly candle here is that we've really been in a very low volatility environment in the Kiwi. Last week was the first week where we really did basically about 200% of the last 5-6 weeks worth of range. So when you look at it this way and this big impulse lower, it suggests that we definitely have more room to go and possibly the 66, 67 area as the next level of support. Certainly the Kiwi now looks to be much more of a sell the rally trade. The weekly sends a much stronger signal than in some ways even the daily does. But let's just go back to the dailies for a second. But overall, it is not a pretty picture in the Kiwi. And at this point, any rally above towards the 69, probably much more of a sell the rally trade than it is a buy the dip trade. So technicals, I think, are painting a much cleaner, clearer picture than the fundamentals are to the downside. And generally, when we have a dispute between the two, you trust the technicals much more because they're clearly seeing something that maybe we're missing at this point. Last but not least, take a look at the Caddy here. And here, the story is really quite interesting. So the 36 was is the upper end of this massive 36 to 30 range, which has been in place really for the whole year, and we broke out above it. But here's the interesting part. We came very, very cleose to testing the 37 and then backed away from it considerably, backed away from it by 50 pips on Friday afternoon, kind of failed out. And for now, and this is kind of clearly a punt trade, if you basically assume that maybe this was all she wrote just for the near term as a contrarian trade, there's very little risk here. You basically take about a 50, maybe 60 point risk on Caddy and try to see if the trade goes back down to 36 or below. It's not, I really don't know. I really don't think this trade is a full turn trade, very much not so. I actually think the much more intelligent trade is probably going to be to buy the 35 support. But if you want to take a punt on a contrarian trade, just sort of on the idea that the 37 failed and maybe we get a little bit of an unwind at the beginning of the week down to the 36, 35, 50s, that's a reasonable risk-reward trade at this point. Getting back down to the 35s becomes much more of a support trade. Clearly, dollar CAD now, much more in an uptrend than it was in a downtrend. We've had that big downtrend move that failed effectively, that really failed to resolve to the downside. And now the whole sentiment and all the technical picture is showing itself very much to the upside on the calm dollars. And you have to trust, I think, the technicals much more here. So any kind of a retrace down to 35, very much a buy, but a short-term punt just for maybe a 100-point or a 75-point turn here at the beginning of the week could be an interesting trade as the week begins to take shape. So it's going to be a very interesting week. Lots of different news flow from every single possible angle. And in many ways, the whole pairing of commodity dollars against the majors is still going to be very much the big theme that we're going to look at in the crosses in the next video. Wish you guys the best of luck, the best of trading. Boris, over and out.